What's up, you guys? My name is Nico, and in this video, I'm going to be teaching the very basics of investing in the stock market. I've been investing for 9 years, and I love teaching people about it, so I really hope you guys get some value out of this. In this video, I'm going to be answering questions such as, what is a stock? How do you buy one? What is the stock market? How do you make money on a stock? Do you need a lot of money to start? And what can I do right now to start making money without even knowing a lot about the stock market? So let's get started. So let's start with the first question. What is a stock? Well, a stock is just a part ownership of a company. You can buy part of a stock by buying individual shares. For example, let's say you like Nike. And right now, the Nike price per share is about $99, but for simplicity's sake, let's say it's $10. So you can buy one share of Nike and pay the $10, or you can buy 10 shares of Nike and have $100 worth, or you could even buy thousands of shares. The more shares you buy, the bigger owner you are in that company. Note, Nike is about $155 billion company, so you're still gonna be a very tiny owner of that company, but you are a partial owner. For the next question, how do you buy a stock? Well, you have to make an account with a brokerage. Brokerages, to name a few, such as TD Ameritrade, E-Trade, Robinhood, Vanguard, Fidelity, these are all brokerages that allow you to make the transaction of buying and selling shares. You can think of it as a robot person that takes your money, gives it to the company, takes the share from the company, and gives you the share. It's what allows you to make the transactions of buying and selling your stocks. For the third question, what is the stock market? It's really just the name for the overall market where all this buying and selling of shares happens. Now, to answer the fourth question, how do you make money on a stock? Well, there's two main ways you can make money off of a stock. The first is by growth, and the second is by dividends. Growth is just the increase in value of a company. If you own a piece of that company and its value increases, well, that means that your small portion will also increase. Let's go to our Nike example. Let's say that at the time it was $10 per share and you bought 10 shares. Therefore, you owned $100 worth of Nike stock. Let's say a year and a half down the line, Nike does well and is now worth $12 per share. Well, since you owned 10 shares, your Nike worth now is $120. You can either sell and make that $20 profit and then pay taxes on it, or if you think it's going to continue to grow, you can hold on to that stock and let it grow and then sell in the future if you think it's going to go up to, say, $15 a share. It's important to note that the reverse can also happen. Say a year and a half down the line, Nike doesn't do so well, it is now worth $8 per share. So now your value has decreased from $100 to $80 worth of Nike. You can either sell and take the loss, or if you think they're going to increase in value in the upcoming years, you can hold on to it. For the second way to make money, which is dividends, it's just an extra amount of money a company can pay out to its shareholders every quarter or every year. Let's say, for example, that Nike pays out a 5% dividend. I think it's lower than that, but we're just going to say it's 5%. That means that if you own $100 worth of Nike, every year you will obtain an extra $5. Note that dividends can change. A company can increase or decrease its dividends as it wishes. So that means that you can make money off of both growth and dividends. Nike could grow and it could also pay out dividends, so it's like a double win. For the fifth question, do you need a lot of money to start? The answer is no. A lot of these brokerages don't have a minimum amount to get started. So that means you could start investing with $100. And for my last question, how can you start making money now without knowing much about stocks or how to pick a good stock? Well, you can invest into what's called an index fund or an ETF, which is basically a basket of stocks. If you want to learn a little bit more about that, I have a video above you can check out. But the truth is, it takes a considerable amount of time and effort to learn a good stock or company before you invest in it. Index funds and ETFs provides a safe, super easy way to invest in a way that promises fairly good returns. And by safe, I mean safer than individual stocks. Obviously, there are other securities you can invest in which are safer but offer lower returns. Anyway, guys, that's it for my video. I really hope you enjoyed it and found some value in it, and see you guys on my next investing video.